From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 1st, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Now today, many countries are on bank holidays, so we could see thin trading. However, the rest of this week's news calendar is quite full, and you will want to make note of these events on your financial calendars and when they happen in your own time zone. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started here with the USD CHF. We're looking at the daily time frame. Several different trends basically since the beginning of the year. The black trend line, downtrend line, red trend line, blue, green, and the black trend line. So we've seen several different trend directions as we've gone through each month of the year so far in 2017. But the past week or so, just been stuck down here at the bottom of this right-hand black trend line between the orange zone and the blue zone. Let's go ahead and zoom in on that area, and you can see that the market's been finding resistance right around 99.60, 99.45. So for the day today, with the bank holidays that we have in place, I really have little expectation of it breaking above this blue shaded area. Now the market could surprise us, but breaking above the black trend line, changing the direction of the trend, breaking above the blue shaded area's resistance, I really have little expectation of that. I would suspect that we're going to look for it to just hold under congestion and underneath this 60 to 45 zone, the blue shaded area. Maybe even taking a little bit of a drift lower, since the buyers are unsuccessful so far getting through that blue zone. We might even see just a little bit of a drift back down into the low 99s. Maybe not all the way back down to 9900, but maybe a drift back down towards 9930, 9925. That's not that far down. We're only talking maybe 20 pips lower before it runs into this area. I mean, you can even see right here the past 3 days over here, and even this day dipping here, staying above the 99.25 level. So for the day today, I don't expect it will break, but if we do see it break above 99.60, I think we could see a nice push, even all the way back up towards the parity level and the pink shaded area that sits up here just above the 1.0 level. So keep that in mind. A break above the blue zone, black trend line, even going into tomorrow, we could be looking for a new rally for this currency pair. But for today and even into tomorrow, holding under the blue zone, we're looking at resistance here for the dollar franc. Moving over to the euro dollar, it's not a whole lot different. You can see the different trends from the different months that, or basically for 2017 that we've seen here, black, red, blue, green, and the current black trend line. So we can see those current trends. We still have from last weekend, the previous weekend, the gap sitting out here all alone by itself here for the euro, and unsatisfied from 2 weekends ago. So very interesting there. If we ever were to see the franc break higher, the euro break lower, then we could see those gaps eventually satisfied. But at this point in time, it's already been over a week now, and there's no guarantees of when that's going to happen. But we can look for clues to that. Let's go ahead and zoom it in again. As you can see, 1, 2, 3, 4, 5, 6 days now, we've just been finding resistance at the blue shaded area. That's 1.0935, 1.0965, and support at the orange shaded area down here. That's 1.0860, 0.830. So if you're looking just to intraday trade within this range, of course you want to sell it as close as possible to the blue zone, buy it as close as possible to the orange zone to give yourself your lowest risk, trading within this consolidating range right here, or a contracting range if you will. And at some point in time, I have little expectation of it happening today, but at some point in time we'll look for the break above the blue zone for a continuation higher, or reversal back under the orange zone. We'll look for the market to head back down, likely eventually down here towards the bottom of the gap from 2 weekends ago, 1.0700, on a significant fall lower. So either breakout will give us a trend direction, either lower or higher above the blue or orange zone. But for the time being, we're just kind of stuck in this period of congestion for the euro dollar. Moving over to the GBP USD, last week we studied a similar situation with the congestion zone, the little range or congestion zone here in the black box. It eventually last week broke above there and now has seen a new high. Good news for us is that we were able to capture profit on that. We took a buy at the orange zone, the bottom of that black box, and all last week we were capturing profit as it pushed all the way up here into the mid 1.2900. So it was a great trading opportunity. I hope you were able to take advantage of it. Zooming in here, of course, we're at the top of the trend, so it becomes a little bit difficult to suggest a buy at the top of the trend. That's always a difficult suggestion, buying at the very top. But on any dip lower, we could have an opportunity to dive back into this, even back here to the yellow shaded area. The top of that congestion could be a place to look for some support, or even as deep as the orange zone. Now, I do think that if we were able to see a breakdown of the orange zone 127.70, that changes everything back to the downside. So we'll watch for resistance. Yes, we're at that. And potential reversal. We haven't seen reversal yet, but we'll also watch for continuation, buying on dips to support, or maybe even a break of the 29.50 becomes an opportunity to see the market go a little bit higher here for the pound dollar. So difficult to buy at the top of the trend. We need it to probably pull back before you buy it. And watching for evidence of resistance and reversal might be an opportunity. 4-hour time frame, I don't think it will change it a lot for us. We did see it gap a little bit lower from the weekend, from the close of Friday's price, a little bit lower. We're pretty close to that now, 129.50. So sitting inside the green zone, well, really, at this point, we could probably just say breaking 29.20, we might look for it to go lower and back above, of course, 29.50, as I mentioned, a breakout above the green zone. We'll look for the continuation of the uptrend for the GBP USD. Moving over to the USD CAD, dollar CAD, clear. It's an uptrend. That's not too hard to see. The red trend line here, we broke through the last two resistance highs where the black circles over here on the left are. So it's just been pressuring higher without any real significant pullback. We did see a couple of times last week where it did try to pull back down, but was nothing sustainable and just continues. Just like I said on the pound dollars, difficult to buy at the very top unless you get a good significant dip lower, maybe down here towards the pink shaded area, or a break above the resistance high, which is the blue zone. 136.80 is the red line at the top of the blue zone at the top of the chart. So at least at this point, if you were going to buy this currency pair, the preference would be to see it break that price ceiling 136.70 or 36.80 before we would expect it to continue to pressure higher. Otherwise, watching for resistance and reversal is a possibility here. If we get some boost for the US dollar, we could see this continue to pressure higher, but if the US dollar takes any hit this week, right back down we could go, or we can obviously have some news for Canada this week that could affect this pair as well. So definitely an uptrend. Want to buy it on dips to support or breaks of resistance. At least at this point, we don't see that happening either way, breaking resistance or dipping to support. So I think we have to be a little bit patient. Otherwise, watching for resistance and reversal may be something we could look for while we're up here at the very top of the trend for the US CAD. Moving over to the US yen, a little period of congestion here, bouncing between the blue and the green zone. It's been pressuring higher all of last week. We saw it pressuring higher. In fact, after the gap, which actually sits down here just above the purple shaded area in the blue trend line, after the gap, we haven't really seen any significant pullback. The day after, we saw a little bit of a pullback, but it's just been pressuring higher ever since. We are capped out into a significant resistance, the blue circle. Black circles over here show us support and resistance at the green zone, 111.75, 11200. Unless or until we see the market get above that 112 level, which is the green shaded area at the top of the black box. It's difficult to buy this currency pair right now into resistance. Let's zoom it in one more time. So buying into resistance is difficult because obviously the market's had a tough time getting above 112. So don't want to buy it now. But any dips back down to the blue zone, bottom of our black box there, 111.40, 14. Well, 111.15, 111.40 is the blue zone. Then we could have an opportunity to go long, target the green zone or higher. Otherwise, watching for resistance and potential signs of reversal for this to go back down could be an opportunity for us today. If anything, I think we're just trading within this period of congestion, waiting for the next trend move. Take it down to the 4-hour time frame, and you can see basically all that happening. So I would say today, unless, which again, we're trading during a thin bank holiday market, unless it breaks through the green zone, I think it's more likely we're watching for resistance and some intraday reversal back to the blue zone for the US yen today. Moving over to the AUDUSD, this currency pair and even in New Zealand have had some significant movement since we had market open. Red trend line, black trend line. Probably the most important right now would be the black trend line on the right hand side of the chart. Let's go ahead and zoom it in one time, and you can see a significant pullback today. Take a look at this. We saw support at the orange zone. We talked about that last week as the market dipped under the green zone and went to the orange shaded area. Orange zone, by the way, is down there around 74.60, 74.45. So we found support 1, 2, 3 days. We've pushed a little bit higher now, back through the green shaded area with the market open. We're toying around with the 100 period moving average. At least at this point, I think we could see a little bit of resistance right around there, that 75.25. But I've been looking at this yellow zone back here where the black trend line is, 75.40, 75.55 as a good clear area for resistance. As we go through our day today, right there into the yellow shaded area. It's not too hard to see. That's where that black trend line comes into play. Let's actually, I have Fibonacci right now of the red trend. I'm going to take that Fibonacci measurement off so we don't have any Fibonacci on the chart. Let's take a measurement from the top of the black trend line down to our low from last week. And that's interesting because now we see the 382 Fibonacci retracement level of this downtrend sits right there at the top of our yellow zone. So we see some instance of resistance there into the top of our yellow shaded area based on Fibonacci. A break through that and the black trend line, of course, we'd look for a reversal for this currency pair. So interesting rally going on right now on the AUDUSD down to the 4 hour. There it is again. If you're going to buy or looking to go long or buy this pair, I think the closer you get to that yellow zone that we just looked at and the black trend line would be a difficult long opportunity. But any dips back down to the green zone may become an opportunity today to go long on potential reversal here for the Australian dollar. So dip to the green zone if you're going to go long, target the black trend line, yellow shaded area, or higher if it can break through there. The other opportunity to go long, breaking through the yellow zone, but we're obviously nowhere near that. Going short, if you're looking for the return of the downtrend, watch for resistance and reversal between 75.40 and 75.55 today, similar to what you saw right here with the blue circle as resistance and then reversal to go back down for the Australian dollar. Moving over to the NZD/USD, similar situation, not exactly the same, but interesting scenarios going on. We did push through the green zone. Take a look. The two black boxes supported the green zone. We've challenged it for the past 1, 2, 3, 4 days now. We're underneath. We got underneath it last week. Friday we got underneath. That is 6,900 down to 6,880, the green zone. And we got underneath it last week, but now challenging back into there. I would say, at least at this point, is still a difficult opportunity to go long because we did push last week under the green zone, and we have that support acting as a clear resistance at 6,900, and of course the double zero number 6,900. So right now it's a difficult place to go long, even though we're making a little bit of a rally. A difficult long opportunity within and underneath 6,900 and within that green zone. I think we're looking at resistance. Only a break above 69 do you begin to look for it to go higher, and otherwise here underneath the green zone we could even see it target back down to the blue zone with any significant push lower. 4 hour time frame, I don't think changes that any. But what I'd like to see here on the 4 hour time frame is some infusion of sell orders. I'd like to see maybe this candle close close to 6,900. The next candle be a strong bearish candle to give us some clear expectation that the sellers are going to come back in for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.